Plenty to talk about on the local market today. Earlier I spoke to Marcus Padley from Patersons Securities. Marcus Padley, well, another wobbly day, but about half the losses were pared back in the afternoon session.
Yes, we were down 92 at one point, ticker we closed down 48, but we've been down 170 points in 3 days, and it's made that recent rally, which sort of broke the downtrend for a while and got a few people thinking that maybe we were going to see a long-term rally. It's caught everybody out. I think you call it a bull trap. And the downtrend has resumed, and the volatility is scaring people off. You know, it kills trade rather than generates trade. We're very headline driven. You know, what's the headline tonight? Greece calls off referendum, and the market's bounced 3%. You know, this is it's not investment. This is casino.
Speaking of dead trade, we've had a few more indications of how far the MF global collapse extends, haven't we?
Yeah, and in Australia, there have been a couple of announcements, but from Iris, who say it may cost them 1% of revenue, and Bell Financial Group, who've got clients with $2.9 million sort of frozen at the moment. And also, it's the big operators like Westpac Online, E-Trade, Comsec, who have got some CFD. Presumably, they're using the MF Global engine, and some of their CFD clients have been affected, but it's tiny stuff for them. And if, you know, they had to make, I can't put words into their mouth, but, you know, they will hopefully sort their clients out. But the exposures for them are tiny. And, you know, Westpac announced a profit today where they've earned $315 per man, woman and child in Australia in profit. So this sort of thing is pretty irrelevant unless, of course, you're a client whose accounts have been frozen. And that's where the real lesson is. You know, you deal in equities, you deal in bonds, you own the bonds, you own the equities, the money stays in your bank accounts. You deal with these big leveraged derivative platforms, your money goes in their bank accounts, and when they go bust, it's their money. And you really have to read your paperwork, and that's the lesson from this.
Indeed. Now, I see OneSteel's profit warning was partly due to the strength of the Australian dollar. We're going to get a few more warnings like that about the dollar, do you think?
Clearly they've got other problems, which is the iron ore price going up. I don't know whether you know, but Chinese steel maker, the second biggest one, OneSteel, just announced results in the last couple of weeks. Profits were down 90%. And the reason why is because their input prices have gone up so much, iron ore prices, and yet the steel prices are flat. So OneSteel's got its problems there, and to sort of blame it on currency, where the currency's been sort of over $1 for most of the last quarter, is probably overdoing it on the currency. But having said that, it's clearly a problem for people. And other currency stocks, including BlueScope Steel, was down 6% today, Cochlear down 5%, Westfield 3.7%, James Hardie, Boral. The other currency stocks didn't do well on the back of it. But I think basically they've got the same problem all steel makers have got. They've got input prices going up, and with the Aussie dollar doing what it is, they are just not competitive.
Marcus Padley, thank you very much for joining us.
My pleasure, Tiki.
To the other major movers on the local share market now, and Qantas fell 3%. It's agreed to ACCC demands to compensate stranded passengers better. The 14% slump in building approvals hit Mirvac. Gold miners were in favour. St Barbara mines up 4.5%, and stem cell specialist Mesoblast managed to claw back some of its recent losses. Turning to currency markets, the dollar has steadied. At local close, it was just over 103 against the greenback. On to the commodity markets now, and in New York, oil is down $1, gold is at $1,724 an ounce, and copper's down again in London trade.